Hey everyone, Jeremy just doing a quick update on the euro. So if we start with our range deviation pivot analysis, this is a chart of the euro futures. Each bar is a half day. The critical things to note, at the end of last year, we can see our two quarterly pivots up here, up and down. Well, we closed the year underneath. So at the end of December, we can see the price down here was well below the quarterly pivot. So long term, that tells me that the euro still has a bearish bias or a tendency for it to go down at the quarterly time frame. Looking at the low, which was in mid-December, the thing to look at is the relationship between the pivots. So at the low, we can see that the yellow first down pivot for the first time in that month came outside of the monthly lower down pivot, telling me that market's potentially oversold. In fact, that marked a low, and through that low, it was obvious that at the end of each week, we couldn't close below the first down weekly, and we certainly didn't close below the first down monthly. So there was further evidence that the market had regained some strength. In fact, when we look at the very end of the, we just zoom in here, it's a little hard to tell. Oh no. So really the market could not close below the first down weeklies at any point, and we were overextended, so the markets had a correction up. We're now getting to the inverse of that scenario. So at this point here in December, the monthly pivots were outside the quarterly ones, which are the brown. Now when we come over to today, what we're seeing now is that the monthly pivot is actually above the quarterly pivot. So that tells me that the euro is now got a weak position, or a weakening position, I should say. But other thing to note is we've still had this quarterly bearish close, or a negative close at the end of last year, because it was under the lower pivot. Price closed under it. So the alarm bells are ringing on the euro. For me, I'd like to start seeing some sell signals. Now when we add in, if I remove the pivots and I add in previous midpoints, so this is the time area study in ChartIQ. Okay, so what that tells me is we've bounced off the previous quarter's midpoint, and we're now having a battle with last week's midpoint. So there is a lot of resistance on the euro between 108 and basically 110. You know, that would be ideal if the market were to pop up around this 109 level. So not only have we got range deviation pivots telling us the euro is becoming overbought, we now have all the midpoints gathering here. That is a very, very strong resistance zone between 1087 and basically 1.1. Final thing we can look at is if we look at the peak studies that are in ChartIQ. So I'm going to add these in. Okay, so they're kind of confirming what the midpoint said. We've got a very strong zone up here around the late 108 and late 109. So the warning signs are there that the euro is weakening. However, we are still waiting for one of these to initiate a trade, and that's a daily sell signal. So I hope that helps, guys.